after, and then he's going to be gone after the freaking show. These demands must be met.
Ladies and gentlemen, welcome to the SOFI
collective bargaining
weekly
session for equal pay for equal work.
I'm getting striked upon right now. Tevis and Steve said they won't work without pay, even though Steve is promoting his Seeking Alpha right now through his hat. He's got it all over. Go check him out. He gets paid more than we do.
No. Doesn't work like that, course boy.
Yeah, it doesn't work like that at all. No, this is not starting until we come to terms.
Chris is
because
here.
Nobody wants to see you run another show by yourself.
Oh my God, dude. I'm literally watching the users drop as you're talking. No one cares.
Tanner was Captain Referral. Now he will be referred to as Course Boy.
Course Boy.
I like that.
If anyone wants to know what they're referring to, it's in the link in the description down below. I mean,
also,
anyway.
Before Chris gets here, shout out to Nora. Thank you for watching this show instead of Below Deck. Capital Exotic's wife.
I don't know what's happening today. Chris Hager was here. He had an audio problem.
Nobody believes you. No. Nobody believes you.
Tanner's stalling because he's late as always.
We're going to be doing, guys, I don't know why you're doing this. This is such terrible listening material. You're just throwing away my whole Thursday right now.
Well, I can say
you're the one that wanted us to come on tonight.
No, I didn't.
Easy fix. We get paid nothing, so give us a 2,000% increase on zero. And
you're not helping the collective bargaining.
Of course, this is zero.
This is what I do for a living. You guys need to leave the collective bargaining to me.
He works for a union. They're trying to strike right now. Steve can tell you guys how much he makes on Seeking Alpha. It's far beyond any of our YouTube channels all put together.
The show will not go on.
So, somebody commented late AF, Course Boy.
1 day early. I'm on his side. He may have paid me off earlier in PayPal shares.
Yeah.
Using Venmo. No.
Using Venmo. Yeah. So
all right, let's get started. Enough of this.
We're doing Q4 predictions because Monday morning is. There we go. Chris, can you hear us?
Yes, I can hear you now.
Awesome, my friend. Awesome. And you got in at the best time. You skipped all that nonsense.
Just remember, Tanner, Chris is not available every week, so you can't replace us. This will be continued.
Oh yeah,
this is everyone's show.
Viking.
I'm not looking to replace anyone.
Let's just get started. All right. SoFi Q4 predictions. I released some predictions this week. Chris released predictions this week. Tanner released predictions this week. They are all different but similar. Where do we want to start? Do we want to start at members?
Yeah, let's just go down the list. So let's do some member predictions. I don't want to start with Tevis because I think that's pretty.
Let's start with you because you're the lowest.
Am I the lowest?
Yeah.
620,000 members.
I'm lower.
All right, Roy, you want to explain why?
Yeah, I'm 6'10". They had a huge spike from Taylor Swift, and I know that fall is typically strong. They have the football games going on at the stadium. I just think that there's going to be a little bit of a. There was people that were thinking of maybe signing up anyway that may have done it in Q4 that just got accelerated to Q3. So I think it'll just be a little bit lower. The other thing is, to onboard people, especially when you're trying to and you've guided for constantly gap profitability, I think they were maybe just a little bit more conscious and conscientious of those new members. So I think it'll just come in a little bit soft. 610 is still really good, but lower than Tanner. I guess I'm the bear.
I just want to make sure. So, Chris, I don't know if that was you with the background noise. If it is,
I'm on my headphones. I don't think it is, but it might be.
Definitely you.
Okay.
Somebody
just mute whenever you're not talking that way. There's just no background.
Sure can.
Thanks, man. Actually, I think you're up next, though.
Then I'll mute. All right. So I had 630. I kind of share Roy's thoughts, where I think that they pulled a lot of growth forward I think Taylor Swift was probably a tailwind in the third quarter. Her movie did come out in fourth quarter, which is probably, good for brand awareness.
Sure.
But I think that they probably tried to pull a lot of their growth forward to make sure that they could cut back on sales and marketing and make sure that their expenses were basically flat quarter over quarter, right? And you can't always pull back elsewhere. So sales and marketing is the easiest thing to cut. So 630,000.
I don't think this comment is true at all. I think if it gets under 600,000, nothing will change. I don't think any of Wall Street really even cares about member growth.
And they've guided for 500K, as the threshold that they're seeking. So, if it comes in at 300,000, then yeah, there might be an issue. But
right. Steve?
Steve's going to be in the high end, so save him for after. Tanner, you go.
I said six. I was the first one. 620,000.
All right, so Roy's at 610, Tanner's at 620, Chris is at 630. I put mine in a range. I'll pick a number for the sake of this episode, but basically my range, the thing that I looked at was the last 2 years of member growth. Q4 is always coming at the highest member growth, whether it's some seasonality, whether it's, something to do with NFL or whatever. Q4 is usually when they sort of let loose on the member count. That might be very different this time around. It might buck that trend if they're cutting sales and marketing, if they're actually focusing on profitability. So, we could just be at a point where we don't beat that 717, but I still think, 650 to 725 was sort of my range. I'll go for 685 and sort of hit the mid-range of that prediction.
Steve?
So this is going to be very interesting. I can't believe you said 685 because I was thinking 687 until I looked at the chart. 739. Let's smash it.
Oh, baby, love it. So
only because in the past 2 years, as Tevis just said, Q4 has been the biggest. Let's be super optimistic.
All right.
So Steve basically thinks that we will break a new member record in Q4. And the funny part of this all is literally the management team in the last earnings call said, guys, stop expecting 600s and 700s, expect 500s. And we're literally 600 and above, all of us. So
yeah,
shows what we think about management's expectations.
Chris?
It's because they sandbag. That's why.
Yes.
So this is what both Tevis and Steve were talking about, and I talked about this in my article too. That like the fourth quarter of the last two, of every year so far, has been the best quarter of member growth. So it does seem like it corresponds probably with football season and other things, right? But
all right,
so there you go.
Yeah. No, I think there's definitely an opportunity to get more members. I think everyone's looking at a mix of. It's not just about members. They also have other goals that they're trying to achieve, like profitability. So how high is their sales and marketing numbers going to be in order to get more members? Who knows, right? So trying to mix that prediction between network effects as the base grows, more likely the new members will grow as long as the offering is the same or better. It's a hard number to guess. What's the next prediction that you guys want to do? Are we looking to do products and these sorts of things, or is that something that we're passing on?
Products is easy, so let's go for it.
So for products, I said 936,000. I'll actually be a little bit more specific, and I'll even go up a little bit. I'll say 950,000 new products.
Yeah, I went with 900,000. So it's basically just 1.5x. My prediction just slightly lower. I think it'll just come in soft for the same reasons as I mentioned that the member growth will come in softer. They're just not pushing it quite as hard this quarter. Other objectives.
Right. Chris?
I didn't predict it, but I just calculated it by multiplying by 1.5 because I'm pretty darn sure that's exactly what we're going to get, which would equate to 945,000 for me.
What was yours, Chris? 945?
Yes.
All right, baby. 1.1 million. Let's get it. It's just 1.5x off of my number. My member count is higher. So 1.1 million.
What is it with these 1.5x's? Jesus Christ. A mil even.
Ratio, Steve.
Okay.
1 million,
Revenue.
Steve? Is that your number? 1 million?
Yeah, a mil even.
All right. All
None
right.
of this 1.5 bullshit, a mil even. And don't fucking bleep me.
Okay.
So I don't even know what we want to go on to next. Let's just do revenue.
Who pissed off Steve before I got
Wait.
on the call? What happened?
We're hold on before we go into the actual like we're blasting through this. I think like let's stick on products for a second. And do we want to talk about like lending versus financial services? I know Chris did predictions like through each segments, but maybe just at a high level.
I have a question for you guys about the whole product thing. How important do we think it is correlated to what Robinhood is seeing with their 401s and everything else? Like, do you think that that has anything that we need to be worried about here with SoFi?
So what I would say is that from what management said is that they're not really seeing any competition with other fintechs, or at least they're not worried about it. It's pretty much all coming from incumbent players. And so I'm not actually worried about the likes of Robinhood and these sorts of things. What I would say is that Q4 was a great quarter for markets in general. December was a great month. Santa came in. So I think that it'll be good across the board for brokerages, for the Robinhoods of the world, even for SoFi Invest. There were market improvements in Q3 and SoFi Invest blew away my numbers. Q4 was even better. I think that they're going to do great. That's what I would say. I don't actually think Robinhood's going to take clients away from SoFi nearly as much as people would think.
Not take clients away, but take new incoming clients. So where I'm going with that is it's Robinhood. Like it is Robinhood, and so many people are looking to unload their 401ks there.
Mm-hmm.
Not a bank. They still have a negative stigma on the stock. We should be the ones people are going to for retirement. We have the financial advisors, we have the brand, we're the bank. They need to build this out. That's where I'm going with. Like, does this hurt us that they are not putting this up in the pipeline? Because now you have people getting situated with Robinhood, and we could have been taking that business.
Well, we got 2% matching, right?
Well, so I think with regards to SoFi, like they're just apples and oranges, man, because of it's so diversified. Like you have personal loans, student loans, home loans, and then Relay is a huge part, right? SoFi Invest, sure, SoFi Money, but like you have all of these different avenues that just Robinhood just doesn't have, and so it diversifies your risk a little bit in terms of one stream being hit. And speaking
I
of,
also think
SoFi. Maybe we want to just touch on for a second the SoFi at work stuff with Chipotle, because I mean that seems to be a stream that's also growing quite a bit with the Kimley Horn partnership in December and now Chipotle as well. Like they have these other avenues to onboard more members onto their ecosystem that is not just the Invest platform.
Right. Anything else on that? On what Steve said?
I think just briefly, I think Robinhood is like they're the brokerage, the kind of Gen Z and millennial brokerage of choice, right? And that is unfortunate. Wish it was SoFi. That I don't think the UX is as good as SoFi. I mean, I've used both. I enjoy Robinhood more, like just honestly. And then also they've got the matching. They've got this 1% match for moving your stuff over, which SoFi's done similar things in the past, but isn't running that promotion right now. But I do think at the same time that SoFi is actually focused on a different cohort of people. They're looking for people who are more worried about passive investing rather than active investing. But I do think that Robinhood's probably going to take a lot of the market share here that could potentially go to SoFi, but SoFi has a lot of other offerings, right? And so you can't be best. They want to be best in class and everything, but they're not right now. And SoFi Invest is one of the things where they're not.
Yeah, completely agreed. I'm in Robinhood, so I don't mind it. It's going to one or the other, basically. So I win either way. I will say that the product, just SoFi Invest is not incredible, and my difficulty is if SoFi, it challenged Robinhood on the rates, and they were trying to bring in an equal number of folks. That could, because of the cost of acquisition, cause them to miss GAAP profitability. So they really, since they've guided so many times, like Chris pointed out, for GAAP for profitability, they're going to hit that no matter what. No ifs, ands, and buts about it. And the other thing is, since the Invest platform is just it's okay. It's not terrible. It's okay. There's a chance that as people come on, they'll be very unhappy with the product and want to go to Robinhood or something else. Versus with Robinhood, it just makes a lot of sense. That is their bread and butter. It's an incredible product and platform. And yeah, they make people stick around for, depending on the product, up to 5 years to be able to get those returns. But I think people will want to stick around anyway. Versus with SoFi, you might have a situation even where with some of the issues that they've had on the platform, they pay to acquire them. And yeah, the person wants to break early, and so they don't have to pay that matching. But there's still a cost there to SoFi, and it's not good. It's not a good look. So I'm completely fine with the way that they're treating this. They do other things better than Robinhood. This is not one of them.
All right. I want to pivot a little bit because this is important. We don't always get data-driven investing. I want to hear if he has time. He looks deep into his work right now. But that being said, the issue that I had posed last quarter was that Noto was lying. I took that back. I think that there were softening how hard the market was for selling loans at the time. A lot of things have changed since then. The probability for rates have been fluctuating. It was supposed to be going up on the chance of them cutting. Things have been changing very fast. So, Chris, whenever it comes to new originations, personal loans, student loans, home loans, what are we doing here? How are we giving away all these loans? Are we selling any? What's going on?
Yeah, that was a lot of quick fire questions. So I think that we will sell some. It'll be really interesting. So what we do know is that in the first, before the first call, before the Q3 earnings call, they already had sold $475 million worth of loans, right? So 375 million were securitized with BlackRock, in conjunction with BlackRock, and then they sold another $100 million to the same partner that they sold $15 million to in Q3, and that's the same partner that they're going to sell, that they've got a forward flow agreement for $200 million or $200 billion for 2024. So if in the first month they were able to get 475 and then things started to ease, you'd think that they might have added to that total during Q4. The interesting thing is that the narrative was still kind of higher for longer through most of Q4, right? Up until about December, which is when Powell came off and gave kind of dovish comments. And that's when the narrative really started to shift. But rates had been coming down. Like if you look at the 10-year and the 2-year, the treasury yields, they had been coming down for some time. And so I'm not sure how much of it's going to happen in Q4. They probably, I would guess that they sold some. They're going to sell as much as they originate on the mortgage side. Student loans are harder. Because they've got an old book of student loans that's pretty crappy, honestly. Like the stuff that they had originated prior to the bank, right? So because a lot of those were before the rate hikes, and they have enough room on their balance sheet for one more quarter to really not have to sell. And if they say, hey, we're going to maximize returns and holding gives us better returns, I wouldn't expect a huge blowout number for sold loans in Q4. But honestly, I think that right now with rates coming down, or the forward curve is coming down, right? Fed rates haven't moved, but the forward curve has moved quite a bit. And so with the forward curve coming down, I think that they're probably in talks with a lot of people for Q1. So I'm interested to see because last quarter they actually gave us a bunch more information on what they were doing inside of fourth quarter than they did inside of the third quarter. And so I'm interested to see if they do something similar where they say, hey, we've got other things in the pipeline. We've got interested buyers. We've got, these same buyers from previously. Right. So it'll be interesting to see because it really could go either way. They could have tried to start offloading more loans inside of Q4, or they could have gotten close to their capital reserves so that then they're maximizing their return. But as far as originations go, so historically here, I'll share. Let me share real quick.
That's really true though, is that if we do know that at least rates are coming soon, then even to dispel the bear case, we could just get a ton of committed capital for forward quarters, which would be enough to dispel the bear case without even potentially having to sell any right now.
Yeah, if they can give commentary and say, hey, we've got, $1 billion worth of loans kind of in that we're planning on selling in Q1, that we're in discussions with partners, and they barely sold anything more than, say, the 500 million that we already know about, that really wouldn't be that bad.
Right.
So as far as originations go, this is a graph of personal loan originations per member. And you'll notice that, so Q4 is actually the lowest in the past 2 years. And so I would expect something similar along this level. So about $470, dollars in originations, especially because they might be pulling back a little bit, because they also are probably going to have some student loan originations. So that means that my prediction for personal loans was about 3.6 billion in originations. And then last quarter, they jumped from, call it 400 million to about, 900 million in student loans. That's a pretty big jump here. I'll zoom in so people can see this. So that's a pretty big jump, right? That's like $500 million in a jump, and payments hadn't even restarted yet. So I'm kind of assuming a slightly larger jump to about 1.6 billion in originations for this quarter for student loans. But that's a guesstimate, right? Like there's never been a time when there's been a moratorium that has ended. So there's not really data that you can look back and say, hey, this is what happened. But I think that it can get there or higher. But anyway, those are my thoughts about originations and loan sales.
Yeah, I mean, SoFi really beat expectations last time around with regards to student loans. And I think that, I mentioned that student loans is a number that I'm going to be looking at within the actual products to take a look at the originations for this quarter round, because the speed of that ramp up, I think people are underestimating it, and it could be a big factor.
It's just a matter of if we want student, I don't know. I think this balance that they have to do in terms of still taking on some home loans, which are probably at the bottom of the rung of what they actually want. However, they will just get rid of it really quick. And then student loans. And then at the top, still personal loans will be by far the strongest. It's what's bringing us in all our money, as long as defaults don't rise too quickly. But yeah, like you said, the demand for student loans is just going to be so strong this quarter. I said in my prediction video, this will probably be the one that I'm so far off on. It could be double what I'm expecting, because we don't really know. It's going to be hard to ever predict that.
I'm actually.
So one thing, I guess, that I would say on student loans is from the gain on sale margin on student loans is actually pretty similar to what we get from personal loans historically. So it's been around 4% gain on sale margin, and the ones that they're originating right now are going to be at significantly higher rates. We're talking somewhere probably around 8 or 9%, which means kind of how I don't have the insights that they do into their business, but from the outside looking in, the way that I would do this if I were SoFi is I would probably originate the personal loans to hold and originate the student loans to sell.
How do they get such a high rate on those? Because
the default rate's like 0. They're really, really low. Can I share an Excel file?
I think you can, but I'm just thinking about the math in my head. Like if the coupon rates of the student loans are a 5% difference, 6% difference, 5, and the default rates are about a 4% different. I don't know. Doesn't that still work out to be less efficient than the personal loans?
So I don't know if I have this graphed, actually. I think I did at some point. But
yeah, the defaults are extremely low for student loans.
Well, while you're looking at that, I guess I just want to chime in here. I'm probably the bear here. Again, I'm the bear of the night. With student loans, I was actually seeing just a little bit more than they had for quarter 2. There's a couple of reasons for that, but just to give some backstory, I work for a major online university. It's one of the top 5 in the world. And we have 2 types of students. The student that comes in, the minute that something is open and available as far as registration or anything like that, they will be there hour one, minute one. And then we have another group of students that will come in absolutely last late extended deadline point, and it's like half and half. And so I think that what we saw with quarter three is, hey, the moratorium is over. And of course, there was some people paying off their loans anyway, doing the right thing. But those people that were like, okay, I'm one of those first early students. They came in hard. I don't think that we're going to have that for quarter four, frankly. And I until there's actually significant penalties or just normal penalties for missing those payments, which I'm reading as September 2024, at least for the federal loans, I don't think that we'll have that big spike. So I'm guessing, and it's just a guess, but 500,000 or 500 million, not thousand. I'm not that bearish.
So you actually think it comes down from last quarter?
Significantly, yes. Yeah, up from quarter two, but I think a lot of it was just front loaded for quarter three. And I could be wrong. I just would not expect a large increase from quarter three. I think it'll be down no matter what. Maybe wrong, but just knowing students.
I think, just to push back on that a little bit, and maybe this is anecdotal or maybe it's something that it's just trained behavior from having seen SOFI reporting consistently. I see these CNBC articles around like borrowers not wanting to restart student loans or borrowers, being reluctant to sort of pay back their loans. And I think there was a poll where, 40% said they were boycotting or whatever. And we know that Biden has incentivized that type of behavior with basically that grace period on loans. And so you project all of this bearishness, and then SOFI reports, and then they beat to the upside. And I just think that it cannot be underestimated, the strength of the cohorts that SOFI deals with regards to the FICO scores. It's a completely different beast.
And average incomes.
And so, you have your sort of average borrower, this person who did whatever, BS degree at a BS university. And then you have like doctors, lawyers, all of these super, like the Henrys, essentially, the high earners, not rich yet people, and they're all going to SOFI. And so I think that there's a big discrepancy between what we see projected in the media around like the bearishness or the FUD around repayment, and then what SOFI reports. They're two different ball games altogether.
Well, what's the most important part that Biden didn't take away, right? Especially for the users or the members who can pay back their student loans. They won't be reporting for their credit. That's fine. These people have high credit. They're going to pay it back regardless. What they do have is really high income, and the interest is still going to accrue. So these people are not going to let it happen if they have the disposable income to be able to pay it off. Now, that doesn't mean that everyone has the disposable income. You can make a lot of money and not be like high income, but not high savings. They might not have the money now. That might also be a reason why people are coming onto the platform, is the refinancing. But still, I think that what we saw in Q3 was a singular month of just letters being sent out. Now in Q4, we're seeing 3 straight months of saying, hey, your payments are due. I'm hoping for at least more than $1 billion in student loan originations. But yeah.
And also in Q3, their FICO scores were really, really high in Q3.
Yeah, 781.
Like it jumped a ton, right? So previously it had been in the low 770s, if not high 760s, I think. But it jumped a lot in that quarter, which means that like they're tightening, right? They're being very picky, so they probably could or choose to originate more there. There's a decent graph of it, right?
One of these things
high 760s,
not like the other.
Exactly. And all of a sudden it jumped. So I mean, they have said that they're tightening, but at the same time, I think that demand. I mean, if you look at, say, credit cards, right? So this is something that Lending Club has said a lot. They said that for their borrowers, what they see is that it takes a little while for rate hikes to feed through the system, because you get a hike and then you get somebody's credit card, like a couple months later, their credit card rate goes up, and a couple months after that, they notice that their credit card rate has gone up, and now all of a sudden and that's when the demand comes. And so I think, I don't know, like to push back against Roy. I respect your opinion, Roy. But I do think that actually having to pay the bill is a much bigger pain point even than just receiving the bill.
And I see what you guys are saying. And in those 1 month, I should probably be higher than 500,000, maybe like $1 million, honestly.
Million.
But I still think it's going to be less than quarter three. The other factor too is it's quarter four. Everybody's looking forward to that holiday spend. We saw a lot more consumer spending out there than a lot of people were anticipating. That's coming from somewhere, and usually that's high earners that are bringing a lot of money in. Maybe don't have a lot of discretionary funds outside of what they've dubbed for holiday spend. And so I think there's a lot of people saying, you know what, even if you have some of those, really responsible people that want to pay back, they'll be like, you know what, penalties are not that bad. I'll just float it for a little bit. Plus, they know, and everybody knows, that rate cuts are coming, that if they wait just a little bit, they'll actually get a better rate. So I think all those things factor in for a little bit underperformance here.
If I could pivot, unless Steve, do you have any thing to add on that? I would like to potentially pivot to something that I haven't given good thoughts on, but would love some opinions from you guys, is deposits. I'm expecting a large number of new SoFi money accounts. A lot of the banks showed in their customer or in their consumer sides of banking that they are seeing decreases in deposits pretty much across the board. What are you guys thinking for deposits across SoFi for this quarter? Are we going to see that same similar $2.3 to $2.7 billion?
I'd like to see 3 billion. I'd like to see it start with a 3. That'd be a nice start to the year.
Yeah. Tevis?
I didn't do deposits estimate. We close out at 12.7, if I'm not wrong, or
It sounds right, or 15 something. Here, let me check.
yeah, one of the quarters was 12.7, and then the other one. But yeah, I'm with Steve on this one. I think I would love to see a 3, especially as the numbers are getting bigger. I want to see what the percentage of the sequential percentage is. Obviously, that's going to plateau because you're starting from 0, and it's just going to go from 0 to 2 to 5 to whatever.
It's 15.6 right now. Average member has $5,100 in their account.
Yeah. I don't expect it to be crazy out of the range of expectations, but I do think that it's going to come in higher than last quarter.
Roy?
I don't have the foggiest, honestly. I had not given any thought. I agree with Steve. I'd like to see a 3 billion, 3 handle. I think that there's a chance, given who a lot of SoFi's clients are, they'll get bonuses, maybe significant ones, and they know how good the rates are at SoFi. So, I think it will be higher than quarter three. I know that kind of contradicts with what I said as far as the holiday spending, but sometimes people treat bonuses a little bit different. So, I'd guess 3. I guess flat.
Gotcha. Okay.
Did you say yours, Tanner?
I didn't really have one. I would probably say exactly what we saw last quarter. About 2.7 is what I think I'd say. 2.8.
I went with 2.92, which is basically flat from Q3.
Gotcha.
This was just to provide a little bit of context for that, right? It's done this weird thing where it does a step change and then stays flat, and then does a step change and then stays flat. And I do think the fact that the third quarter was a lot less, or had a bunch more new members than I'm expecting in the fourth quarter. So that's why I kind of think that it's going to stay flattish rather than going up. And then there is also the holiday spending thing.
And deposits per money account is not plateauing, but it is slowing down. The one thing that I would like to know, and this is super technical, and it only really matters if you're just predicting numbers all day, but here, let me show my screen just real quick.
That's what people
we're
like
starting
us do.
to see that curve sort of loosen up on the deposits per money account.
Yeah, I mean, you expect that, right?
But yeah, exactly. And it's not like it's going to continuously climb every single time that someone gets paid. There is going to be spending on the other side of that, right? So,
well, we should
moving into an invest account.
Yeah,
we should know the deposit number before earnings, right? That comes out with the bank numbers.
Maybe.
Last quarter, did we get
Yeah,
the
like
bank
if it
numbers
comes
ahead of
out.
time?
No, we got it like 2 days
Yeah.
after.
We got it
Yeah.
Q2 ahead of time, and I think Q1 we got it ahead of time. I'm not sure about Q3. I think it was after.
I think
I
they're
think it
on
was
to us.
after too.
Yeah, they're on to
I
us.
think you're right. It might also have to do with when because now they're reporting every Monday, and so or the Monday, the last Monday of the month, like after the quarter ends, and before they were a little bit further out. Like those Mondays came later, and so anyway, it is what it is. We'll see if it pops up tomorrow.
In terms of what is the next prediction that we want to
Tech platform.
tech platform?
yeah.
11 million new accounts, massive acceleration, 30% margins, maybe 29. That's my guess right there.
Roy.
I did. This one's really hard to pin down. And I'm not going to say, just because I read Chris's whole report, his argument was compelling, and I don't want to steal his thunder. So I'll just say with Chris here, even though I've disagreed, I think with you every step of the way here, I think you're 100% right. And I think that you went into this, but I'll just say this little bit. Just they're guiding for 50% of their income over the next year coming from lending and the tech platform. And so we have to see that meaningful acceleration. And I think that we begin to see that here in quarter 4.
So don't get that confused. It's 50% from lending, and then the other 50% is a mix, an undisclosed mix of tech and financial services.
Yeah, I said it wrong. Thank you for clarifying. Yeah, and that is for the next year. I understand for 2024, not this quarter, but I still think that we're going to see that a little bit of an acceleration there.
And Chris Hager was kind enough to give us insider information that it's for the full year of the 2024 after speaking directly to the CFO.
I don't want any insider information. What the hell's going on?
It's not insider information.
It
It's something he said publicly, and I just asked him, "Is this what you meant?" And he said,
Steve
"Yes."
immediately freaked out. They're after you, Steve. The SEC's coming after you now, baby.
Like, to be completely clear, so
email.
So here's the thing. Like, so I've had a couple of conversations with the CFO, with Chris Lapointe. He is really, really good about saying only things that have been said publicly. Like, when I ask questions, every single time, like every answer he gives me is a clarification of something that they've said in the past. Like through all these conversations, there's never been a bit of like what you'd call insider information in any sort of way that like,
if there was, would you tell us?
He said, like, if there, I mean, I wouldn't lie to you right now, right? Like, I don't know who I'd tell. I probably can't tell anybody, right?
Just say no.
No, I wouldn't.
Thank you.
But I can't. But the thing is that, like, I guess this is part of the reason that I'm bullish on the company, is because just the high values and integrity of the management team, and even just talking to them, like, you can just tell good people. Anyway, so yeah, it is a 50-50 revenue split for the entirety of fiscal year 2024 between the two. I think that, like, if you want to get there at that, you have to start accelerating before we get to 2024. It seems like to me, right? Like, otherwise, lending is so far out ahead that it's going to be hard to get that split anyway. Like, even if lending stays completely flat, and like when they talked about lending, they still talked about it having slow growth. But they talked about it being, just additive to growth rather than the growth driver. But I do think so. I think the tech platform is next quarter. I actually didn't guess for Galileo accounts. It's true, they are just jealous. But I think so. Last quarter we added, it looks like about 7.4 million accounts. So I think probably, I don't know, maybe 10-ish. So we'll call it 147 million accounts, I would guess, but I don't really know. I could go back and get a better estimate for that. But I think for the actual, so I expect them to accelerate to about a 40% kind of year over year run rate, which would put them at about 98 million in revenue for this quarter in the tech platform, because they really do. They need to start accelerating now. And they've guided, like, a couple of times this year, they said, in Q4 is when we're going to see a return to growth.
And you might want to mention contribution margin.
Oh yeah. So that was a good point. that I said in the article. So if you look at here, let me pull this one. Is the chart is helpful to see on this one, so let me find it and share it.
Oh, you just took it away.
Oh, where did it go? Oh, I was presenting already.
Yeah.
Okay, oops. We'll try again. There we go. Okay, so last quarter they saw this huge jump in contribution margin, like a 15% jump. And if you go back, and I have the quote in here, so we'll look at the actual quote. They explained why this happened, and it makes me think that they're going to see the same thing again this quarter. So if you come down to here,
Chris, before you go on, real quick, what is contribution margin?
Okay, so contribution margin means, so if you have $100 million in revenue, the contribution margin is what remains after you take out all directly attributable expenses. So in SOFI's case, the interesting thing about contribution margin is it can be defined different according to different companies. So this isn't true of all companies, but the way that SOFI defines it, all directly attributable expenses include like salaries of everybody who works in the tech platform. It includes sales and marketing costs. It includes the cost of like hosting their web servers and, you know, customer service, everything else. So all the things that you can look at that expense and say that was a technology platform expense. Right. They subtract all that out, and then the contribution margin is what's left over. So then if you made $100 million and your contribution margin is 36%, it means that after all of those expenses have been assigned to the technology platform, you had $36 million at the end of the quarter. So what they said, what he said right here, and this was from, I can't remember, it was one of either the Q&A or the earnings or one of the recent things that they said publicly. But he said, here, in addition, Q2 was elevated as a result of a few one-time items, and then in Q3, we benefited from lower comp and benefits as a result of maxing out on payroll taxes for the year and a few other one-time items. So if they already maxed out on payroll taxes for the year in Q3, it means that they're still maxed out on payroll taxes for the year in Q4. And so that's one of the reasons that I expect. And again, if they have a few of these one-time items in Q3, they've been so laser focused on Q4 profitability that I think that there's a decent chance that any expense they could take up front and like attribute to earlier quarters in the tech platform or anywhere else for that matter, they would have done it. And so this is the reason why I actually think that in Q4 we'll probably see again really high contribution margin, so somewhere around 35% plus, or plus or minus 2 or 3%, around 35%, and then I think it'll drop again. I think it'll drop back down in Q1.
Gotcha. Because
they'll have to start paying payroll taxes and these other things again that they kind of again finagled a little bit, so that then their numbers for this quarter have less expenses on it. That's my theory.
Gotcha. I also wanted to add, well, I was doing my prediction. I didn't say revenue. I said 100 million and 500,000. So just 100 million. Steve, do you have any predictions for the tech platform as you look into Q4?
No, I'm more focused on EPS, to be honest with you.
That's going to be, that's going to be the climax of this discussion.
But this is the big part for you. For what do you think for accounts, at least?
I'm hoping accounts go up. It's not, this quarter is not about the tech platform. It's about talking about the RFPs and the process about not just utilizing the tech platform internally and the residual savings that they're going to generate, but what banks, like I'm very interested in what banks signed up with them. They said a large regional signed up. I would love for them to say who, if they're able to. And I want to know what RFPs they're in and how close they're getting, because the sooner that we get big clients moved on to this, the sooner that they can start monetizing this and growing the tech platform at scale. That's the big thing.
Yeah. Yeah. I think they said that they're in a proof of concept phase with a large bank. And but honestly, though, I don't think we're ever going to get a real name. I think that they'll say we're now working with them and we're about to onboard clients. I don't think we're ever going to hear the name.
Look, as long as they come out and say that we won this client,
yeah,
that's good enough for me. and that they can show that to other perspectives and get the ball rolling. That is the important thing, because that's where you're going to see an S curve in it. They got to win some big contracts.
Right.
And on
It'll
that
act as a
point, I
magnet.
think that there is a lot they could do. Sorry, Steve, keep going.
No, I'm just saying it would act like a magnet. That's it.
I think there's a lot that they can disclose if they choose to without breaching their NDAs, right? Like they could say something like, this is how many regional bank partnerships we have, and this is how many, small community bank partners we have, and this is how many, B2B clients there are. So like there is information that they could give without disclosing anything that's confidential. But right now, as of right now, we don't get any of that information, which is one of my frustrations with the amount of information that comes out.
If anybody from the SOFI team is listening, or Chris, if you could pass along a message, or maybe we can get a message with a smoke signal to them, maybe they should add a slide in the PowerPoint presentation that they put out every quarter with a pie chart that shows large financial institutions, regionals, community and thrift banks, and B2B customers, and show how many customers in each segment utilize their tech platform. That way we can see how it grows quarter over quarter.
Yeah.
Or even just
in the shareholder Q&A, I asked that specific question. And I've asked that specific question also when I was talking to Crystal Point, right? Like, so he has gotten, at least I've asked him that question.
Okay,
and they
good.
did say, so they said that as it becomes a bigger part of the revenue stream, that they will give more clarification and more numbers basically, and more clarity on what's going on there. But I don't know what, right? Like, I don't know what those numbers will look like or what they will be.
And dude, like Steve, I'm sure your message probably got out. I was saying to the chat, like, we have, I think, 600 or so people, watching right now. And I said to the chat, the thing that kills me is that the SOFI executive team is probably sitting in their living room with a beer in hand, just laughing at us idiots poking around in the dark with our predictions when they already know all of the numbers ahead of time.
So let's get to the most important thing for Monday, EPS.
Hold on. Let me just say my quick spiel on tech platform, and then we can get there. Sound good?
Yep.
No, we got enough. Let's go on. No,
It's a black box.
This is why we're going on strike, by the way.
Yeah, seriously, these conditions, I can't work like this. So, okay, if you thought my member predictions were bullish, I think the tech platform is really where I go off the rails, because I am placing a lot of confidence in the fact that they're going to be increasing the member accounts, whether it is a pilot program, which I don't think we're there yet. I think it's too early still. My prediction for those was Q1. But I put 14 million new accounts at Galileo, which brings them up to 151. I think 145 to 151 is really that range where, we can expect something. But, if we hit 14 million, that is going to be a significant improvement from the 137 to 151. We'll see what that translates to in terms of margin, but that essentially, is my bet behind the management team, trusting what they've been saying for a long time, where re-acceleration is going to happen in Q4. So we'll see what happens.
I mean, that would be a 10+% growth sequentially in their accounts. I hope it happens. Everyone here hopes it happens.
They used to grow 10 million a quarter back in like 2021.
Yeah, I mean,
like when they first acquired Galileo, right? And neobanks were a cool thing, and rates were low.
That's post-COVID. That's 0% interest rates. That's a whole lot of funding for fintechs. That's not going to happen. Or we're not going to get back to those growth rates, at least for a while. But yeah, at least my assumption. I don't think that there's enough companies even offering great services that could even partner with Galileo right now, unless we go to legacy financials.
Which they did name drop in the Q3 earnings call. I was rereading the transcript this week, and they said, they're already working with legacy financials, and we know this to be the case. It's just a matter of when the pilot programs are going to end and when they're actually going to start, having the full migration of accounts. That can happen this quarter. It can happen next quarter. We don't know. One quarter, we're going to wake up and we're going to say, holy crap, how did SOFI add 30 million accounts? It's because they validated the pilot program.
Yeah. Okay. Let's all. I don't have a thing, but I've got a beeper. So, let's do EPS. Steve, you want me to share your screen?
Yeah, can we throw up the guidance slide? Steve, you're on mute.
You're on mute, Steve.
Jesus Christ. I think it's interesting to see before we give our predictions what the street is looking at going forward.
Sure.
I mean, they're looking at 6 cents for 2024 would be
That's
22
full year.
Zoom in a little bit.
5
That's full year, 6 cents, by the way.
full year. But look, think about this 2025, 22 cents puts it at a forward PE of about 34.
So then what are you guys predicting
So
for EPS?
EPS prediction for this
Not even
quarter,
for 2024, by the way.
EPS prediction for this quarter from analysts is 0. It's
Mhm.
0. It's just like under 10 million, just eking through profitable in the black. That's it.
That would be like under 4 million, right? Because you round up or down.
No, it'd
So
be.
soft.
Oh, sure. Yeah. Okay. I see what you're saying. What are your guys' predictions for EPS?
Mine's 2 cents.
2 cents. I'll just be honest. Mine's under a cent. I would expect somewhere between 5 to 10 million.
Yeah, I'm actually expecting 3, or at least it'll round up to 3, just because I think that they have hammered in that they're going to be gap profitable for so long that they took every measure, including perhaps reducing the inflow of some of the new members and loans that they could sell. Just as far as acquisition costs, they kind of tampered that a little bit. So I even the layoffs, like it's a small thing, but they waited until January. Maybe they did that just because of holidays. But it could also been like, you know what, we don't want to pay that severance fee coming out in the fourth quarter. So I think that it'll be a good surprise of 3 cents EPS.
Oh, 3 cents EPS. I thought this entire time you meant 3 million. I was like, geez, Roy.
No, I'm not Barris anymore.
I love it.
Chris?
So I have 2.8 cents because I looked at what the gap net income would be, which I think was like, I can't remember what my actual prediction was now. I can pull it up, but it rounds up to 3 cents. So I'm expecting 3 cents. And it's only slightly above the EBITDA guide that they gave us is what would work out to that.
Chris, take it easy, man. That's like half of what they're expected to earn this year.
Yeah, well, it's SOFI. They come in, they
Half of what they're expecting
guide
next year.
conservatively and come in above.
I mean that 2024 target is laughably low. Like it's like I actually had to pull it up from a couple of different places because I'm like, that's off. They just have bad data and they don't know what's going on.
But what would be not sandbagging that number for 2024?
I think at least 14 cents.
At least.
Yeah, because you got to look at it like this. They're going to be profitable this quarter. Otherwise, they would have warned, they would have said something. Because if
They
they
would have
don't
revised.
warn and they miss, that's going to be a big issue. Much bigger issue than if they warn and miss. So I think that they got to come in anywhere from 2 to 4 cents this quarter. So I'm going 3 cents. The normalized estimate is 4 cents. The gap estimate is 0. But when I look at a quarter over quarter basis, this quarter consensus is 0. Next quarter is 0. Q2 is 1 cent. Q3 is 2 cents. Once they become profitable and they report, it doesn't matter if it's half a cent, 1 cent, or 5 cents. The second that they are gap profitable, it becomes a different ball game. They can no longer miss anything.
Mm-hmm.
And I don't think that they can come out of the gate in Q1 when they report in May and come out with anything less than 4 or 5 cents. I just don't see that happening. I could be 100% wrong, but this becomes a different ball game when they're profitable. Expectations are going to be more. I think 2024 is going to be 15 to 20 cents for the full year.
Yeah, and I know the layoffs, it's a small segment, 4% of the workforce there. But I mean, it's showing that they're being very cost conscious. And yeah, there's a payment that you have to pay, the severance pay as those people are laid off. But over the whole year, that's going to pay dividends. And it really sets that mentality that, unlike even SoFi, but companies before and during COVID, where they just would hire, not worry about it, not worry about efficiency. This is a very efficient, well-managed company. And I think that they're going to dramatically surprise an EPS for the year. I just tallied it up in my head, thinking of growth and thinking what Steve said. I think they could hit 25 earnings per share for the year. I really do.
Jeez.
That would be surprising, but I mean, it's inside the realm of possibility. So
Mine's like half that.
Yeah, seriously.
I think 12 cents would be a great year.
Look, either way, we're going to get an initial guidance this quarter for the full year 2024. So we're going to be, we're going to understand what the ballpark is of what SoFi is expecting. Obviously, they're going to raise it 3 more times throughout the course of the year, but we're going to get an initial number.
So can you pull this up?
Sorry,
SoFi will not pay a dividend in the next 5 years.
I know. I was just putting that up.
Probably
I know. Okay, so these are the estimates for next year these are from Yahoo Finance, right? So they're estimating, call it 5 cents. Some other places have 6 cents.
Right.
So if you look and you say what that is, if you assume that the difference between, anyway, that works out to about $530 million dollars in EBITDA. So because SoFi doesn't guide for EPS, right? They always guide for adjusted EBITDA. And so so that people, when they're watching this on Monday, or when they're looking over the investor presentation on Monday, there's not going to be, or there might be, but I would doubt that there is a guidance for EPS for next year, because they just haven't done it before. So when you're looking out for this, if you see something that's above 530 million for the year, that's going to be higher than what Wall Street is estimating for next year. And this is back of the envelope, right? This is close, but not exact. But if you look at their guidance was for 140 million in EBITDA for this quarter, which means if you just said that SoFi is not going to grow at all for the entire next year from Q4 numbers, that would end up being $560 million. So even if SoFi just does, so if they hit their guidance for EBITDA this quarter, and then they don't grow EBITDA 1 cent for each quarter from here on out for the next year, they're still going to come out above, like that would still be more than 5 or 6 cents of GAAP net income for next year. So that's why when I look at those numbers, I just see them as laughably low. And so that's what, anyway, so I think that their guidance, so one of the things I put in my article is I actually guessed what they're going to guide for, which is a hard thing to do, because it's my guess of what SoFi is going to guide for, but SoFi doesn't actually guide for what they're going to do. They guide a little bit low. Anyway, but I think that they'll end up guiding for, call it 2.65 billion in revenue and about 585 million. These are at the midpoint, right? And this is the GAAP EPS that corresponds to. So I think their guidance will end up being correlating to a GAAP EPS of between 8 and 13 cents. But I expect them to at least get 14.
I think that they also, that could be a fun little question. What do you guys think that SoFi will guide for? Because I also think that's kind of funny. I think that they'll guide for 8 cents. I do believe that, because they're going to want to beat Wall Street, but they're not going to want to put something up that they can't deliver.
Dude, that's not I don't think that makes sense. Like, if they report 3 cents, they're not going to freaking guide for 8 cents.
I didn't say they're going to report 3 cents.
Well, I'm just saying.
You're taking other people's answers and putting it into my guidance.
He said that they're going to report 1 cent.
Yeah, so 8 cents seems really viable.
Okay, fair.
So hold on, bring this up. So this is their deck, and what's very interesting here is their original 2023 guidance on the low end. Let's just look at the low end, was 260 million in adjusted EBITDA.
Yeah.
In Q2, it got revised to 333 million, and now the low end's 386 million. So they went up by 126 million throughout the year on the low end. So this year, 2024, is going to be very interesting.
Yeah, I mean, sorry, I saw a stupid comment. I do believe that as 2024 we get in there, if rates start to cut, that profitability will not always be the mark of this company's large success. And that if we do get to a point where we want 1 million new members per quarter, they will sacrifice new earnings for more growth. And you can't have both. So are they going to go full on for profitability? I mean, this quarter they are, and that's why everyone's expecting low members. And then if you're expecting 1 million new members a quarter, where are you going to get your 25 cents of EPS? So
They absolutely can do both.
I mean, sure. Okay. In a perfect world, you can
That's
do
all
both.
I need. That's all I need. Chris to say it, and then it's valid
Give
now.
me a second.
You can't have me
Chris,
expect
how
1
about-
million members a quarter and 8 cents EPS, baby. You can't have it. You need higher numbers.
So
Why
hold on.
can't people just settle for good or great? Why does it have to be the best thing that's ever happened in the history of stock?
It's not the best
every-
thing that ever happened. This is totally reasonable conservative estimates. Give me a second. I'll pull it.
Conservative estimates.
How much adjusted EBITDA is equal to 1 cent of earnings?
It's
10 million, I think.
yeah, like roughly
9
10
and a
million.
half, right? There's 900 and like, yeah. So sorry. So
9.8
like 20,
million?
Let's just say 10 million, guys.
Yeah.
yeah, call it 10 million because they'll be at about $1 billion of float next year.
So we're expecting between
Yeah.
20 and 30 million if you're saying 2 cents to 3 cents. And then 8 cents is Tanner's guess for 2024. That's 80 million, so on and so forth.
No.
Steve said
8 cents is not my guess for 2024. That's my guess that SoFi will say for 2024. I'm saying 12 cents. They'll have a 50% beat, and everyone's calling me a freaking maniac.
You said 8 cents a minute ago.
No,
you said that they were
SoFi
guiding.
will
for 8
guide
cents.
for.
Okay.
Look, the truth
Okay.
is, it doesn't really matter what they guide for because they're going to raise it 3 more.
They're going to raise it anyway.
I know, but that's why I said it'll end at 12. But still, the guidance will matter because Wall Street will use those numbers.
The real question
So-
is who's buying in the 13F filings, and at what point do these shorts get shaken out?
Right.
So share this if you can. This is from, I did a Seeking Alpha article recently. So this is based on that 50-50 revenue split. So if you assume that lending is flat from Q3, this is their revenue this year. It's going to be right around there. If you assume that lending revenue, the only two assumptions that go into this is number one, lending revenue is completely flat. And number two,
2 billion just for lending, or are you saying?
So the total 2023 revenue is about 2.06 billion. That's what they've guided for, right? So if they hit their guidance, this will be what it is in for all of 2023.
Yeah.
Now, if you assume that when they said 50% of our revenue is going to come from lending and 50% is going to come from the tech platform and financial services, and then you say lending is completely flat from last quarter's level, so from the third quarter levels, you end up with $2.74 billion in revenue next year. So that's an increase of 680 million, right? And then they've guided, so they've said multiple times, for every $100 that we make, 30 cents of it will drop to the adjusted EBITDA line, and 20 cents of that will drop to the GAAP net income line. So if you just take what management has said at face value and conservatively say lending will not grow at all from last quarter's levels, what you end up with is an extra $680 million in revenue, and that corresponds to an extra $136 million in GAAP earnings for 2024. And if you assume that they start at break even, so that the total GAAP net earnings is only that 136 million, that's 14 cents for next year.
But
so that's why I say I think it's going to be 14 cents or more.
Where are you getting that SoFi said that they're going to drop 20% down to in GAAP earnings in 2024? Because they said going forward.
Yeah, incremental margins. So right here, third quarter earnings call. Let's see what we talked about earlier this year from an investment standpoint. that will focus on 30% incremental EBITDA margins and 20% incremental GAAP net income margins as a guiding factor, and how much will this was actually said will drop. Seeking Alpha got the quote wrong, but how much will drop to the bottom line versus reinvest in the business.
So you
So
think
SoFi management, and this isn't the first time they've said that. They said incremental margins are going to be 30% for EBITDA and 20% for GAAP.
I'd be so hard pressed if they can get there that fast. That would be like, honestly.
So
the fun thing is about me being so conservative here is I will win just as much as you for being this conservative. But that is crazy if they can ramp from where they are up to 20% GAAP margins while still ramping.
right. No, not 20% total margin. This is 20% incremental margin. So for each new dollar of revenue they get, so not total, because that would be crazy. If they got to 20% incremental margins, and that's what I'm calculating here, is just the incremental revenue, right? So the incremental, if you calculate total, it would be, what is that, 136 over 2740. So that would end up only being a 5%. So this number, right, if you take 136 and you divide it by this total revenue of 274, that's slightly under a 5% margin. So overall margin for 2024.
Chris, when did Noto's RSUs vest?
The PSUs?
Yeah, PSUs.
2026.
Okay.
So by summer of 2026, for them to get all of their shares, it has to be above 45 for 90 days before the summer.
And it starts at 25. It goes 25, 35, 45.
25, 35. So they get a third of the shares vest at 25, a third at 35, and a third at 45.
I may do something stupid.
By
I can't say it live, but I think I'm going to do something stupid.
You're going to buy in for 2026.
Save it for the after hours, Steve. I know we're over on the hour. Rapid fire. Last question.
No,
just for fun. Price, and then we go into the after hours.
No after hours right now. We'll do after hours tomorrow.
It's not your decision. No, it's not your decision.
Steve, do you hear this guy?
I hear this. You're about to get booted from the show.
There's 600 people
union here, okay?
There's 600 people here. We're talking about earnings. I'm excited. I'm not trying to take this away from and we're having a good conversation. You want to stop this right now and stop the conversation?
We're gonna do price first. You got to leave some on the table, baby. We're gonna be back Monday morning.
That's true. All right.
We'll have a lot to discuss Monday morning. I don't think that we'll run out of things to talk about.
All right. What did SoFi close at today? I know we have trading on Friday, so it might not be.
765.
All right, 765. Chris, you're up first.
Dude, first of all, if there's anybody listening and they think that I have any idea what the stock price is going to do,
that was my answer.
They're morons. I am so bad at short-term price action, okay? I'm just going to throw this out there right now. This is why I am a long-term investor, is because I always get short-term price action dead wrong. Okay, that being said, if they do what I think that they do, so they beat by, call it 3 cents, and they beat by, I think it was like 15 million or maybe a little bit more, analyst estimates for Q4, and they guide up for next year, I think we probably get at least, I don't know, I think we come close to touching $9. So probably like high 8s would be my guess. We'll call it 8.85.
Love it. Yeah, somebody commented in the chat saying this was candy time. All right, you had all the veggies and all the healthy shit, and then this is the dessert. Okay, price. Roy, you want to go next?
Sure. I'm going to say $11.
Roy, how does that make sense, man? You expect them to report 500,000 members. You expect them to miss numbers, lowest on members, and $11.
Well, I said, a lot of that was intentional to get be sure that they hit GAAP profitability, 3 cents. I think people will get excited, and there's a lot of short interest on this name. And so I think there will be some covering. Once they're GAAP profitable, people say, okay, I need to rethink my short position. And as a result of covering, I think that we really do see $11. Like, it touches $11. It doesn't stay there. I'm not saying that. And then it'll fall back.
Let's stick on that. How can we figure out where everybody's shorts is? Like, where's the largest block that needs to be covered? Like, what price point are these people shorting this at?
I think there are.
I mean, the
tools
highest
that-
it's going to be like $10, right? 10.50, because that's the highest we've reached pretty much this year. Like,
1170 is the highest for the past 52 weeks.
but that was
But
in,
people-
most of those shorts would have covered when we got back down to 5, right? Like, there's nobody who shorted at 11 or not 5, but when we got back in the $6 range in, what was it, October? So anybody who shorted at $11, if they didn't take profits when SoFi was down around $6, I'd be really surprised, right? For the most part.
Not if they
I
don't
think a
think
lot of the shorts
I think they're
probably
going
got
out
in
of
around
business.
9 or 10.
Can you throw up some of these comments for Roy? I'm dying over here.
I mean, there's still 13.2% short interest in this.
It's not insignificant, but guys, just like to preface it, I really do think that we're going to hit 11. I know it was a little different environment, but in August we did that on earnings, which were not nearly as good as the previous quarters, and I don't think as exciting as hitting this gap profitability. Plus, we're going to see the guidance. I think it's going to be exciting, but I am not making a short-term prediction or bet as far as my money in SoFi. It's all shares or leaps, except for I sold some puts. So, either I get money or I get shares. I'm happy either way. So please, please, please don't take, my guess or anyone else's guess and say, hey, I'm going to buy short-term degenerate calls for Monday. Don't do that, please.
Oh man, Roy, you just went from like the bear to the hero in one episode, man. It's crazy.
I mean, like, the stocks can do funny things when sentiment shifts, when there's been such bearishness. And we've seen like with PayPal, it didn't take much for that thing to run up. Of course, it's come back down. That's in the market right now. That's the macro that we have. I don't think that's going to change on Monday. And there's the short interest. I know that there's going to be covering. I think we're going to see the typical run up for SoFi because they always beat. They always do. There's going to be excitement, and I think that it's going to come back down. Where it lands at the end of the week is a different matter.
Dude, everyone's dying with these comments. This is too good.
This is what I think people need to remember. If the earnings call is strong, because it's going to be in the morning, okay? If they come out and beat with 3 cents, and if guidance is strong, Noto is going to have a much different tone on TV. And he's going to be on Bloomberg. He's going to be on CNBC. He may even be on CNBC twice, whether he's usually on Tech Check in the afternoon. And then who knows if Kramer brings him on. I would love to see that because a lot of people watch Mad Money.
Somebody posted it. I think he is going to be on Kramer as well.
Is he really? That would be awesome.
He's on Kramer a lot.
Yeah.
Listen, if he's already scheduled that, he's got something to say, obviously. So this could be I would not be surprised if this goes over $10. Now, keep in mind, I do not trade, okay? All my shares are long-term. I bought shares 2 weeks ago, so those are not long-term, but I've been adding. I'm down on those shares. I am considering doing something stupid, which I probably shouldn't say. So I'll leave it at that.
I mean, say it, dude. Say it. No one's watching. It's just us
Nobody's
friends.
watching. All right, so do not
friend.
do this. Okay, do not do this because if
Do not
I
do
do
this.
it, I don't know if I'm going to do it, but if I do it, I can literally throw this money away, and it doesn't matter.
Money's
$10
gone.
calls are selling at 20 cents a share. I may take a gamble instead of going to a casino or placing a sports bet online. I mean, at 20 cents a share, it may not be a bad gamble. I don't know.
But
It's a
this
gamble.
is
Let's be very clear. It's a big
Yes.
gamble. This is not smart by any means.
this is a small amount of money for you. You can afford to lose it.
Yes.
It's no big deal either way. So options, guys, if you don't understand them, especially around earnings time, just avoid them. Just
And that's
completely
the
avoid
only
them.
reason why I would risk. And I'm not talking about 1,000 options or anything. I'm just talking about a little bit gamble just for fun, just in case Noto comes out and they end up getting some upgrades. I mean, $20 a contract. Interesting. I mean, think about it this way. If you were to go buy a $20 scratch-off ticket, you would probably have better odds with a SoFi contract for Monday.
I mean, Look, I see. Did you see Eddie? Okay. Anyway, I, like Chris, have no idea what's going to happen with the price action. What we do know is what analysts are predicting. The thing is that SoFi can put out the best news ever, and they'll make some comment or there'll be something in there where bears will attach onto next.
And I'll go to 6 and I'll buy more.
If their capital ratios go down a little bit lower, like something that just gets bears to stick onto to keep the price down. Who knows, right? There's always something new. What I really care about is just how well they perform. If they end up beating on the upper end of their EBITDA guidance and their revenue guidance, I will buy more shares for sure. I'll increase that weight because it's not even adding up. Like this quarter is going to be such a blowout quarter to just even match what they're saying for expectations. If they're going to get to something like 3 cents EPS, or some people are saying 5 cents EPS, these sorts of things, this stock price increase could be unbelievable. You're talking about their Wall Street's expectations for full year of 2024 happening in Q4 of 2023. It would just be unbelievable.
Tanner, somebody commented, "Shut up and let Roy talk."
SoFi to the moon. Oh, it's going to be good. Just have the long-term horizons. I completely agree with Tanner. Like, we don't know. We're just guessing.
2030. Like, seriously, investing is a long-term game.
Mm-hmm.
Nobody can predict anything in the short term.
And all of us will recall in the last 3 months, there have been just absolutely silly bear cases and price targets that have brought the stock down. We can see a complete outperformance, just stellar results, and the stock still falls. It's weird. That's how the market works short term. Long term, I think we're really good in this company. I still think we're going to 11, but play it safe. And
it could come right back down. I mean, this could also go down on Monday.
It will. Well,
nobody knows.
Honestly, I think I deserve so many apologies. How am I the guy being called the pumper and all this shit? I had the lowest estimates across the board. Like, so funny.
So I just looked at my account. I am probably going to buy some more shares tomorrow because in the account I'm looking at, I'm actually down on SoFi because my average price is over $8. So I will probably buy more shares tomorrow.
Good stuff, guys. And
I
I'm
think
happy
that's
we did
another
this on
thing
Thursday because
does anybody know their average price on SoFi?
Yes. Yeah, I do.
I just recalculated mine recently.
All you guys in the chat are fucking morons. I love you all.
Are you guys up or down? You don't have to say.
Right now I'm down.
Yeah, I'm down too. Like, I want to be very clear. Like, I am not up on SoFi. I am down. So
I'll check right now.
That's why I'm very comfortable buying more shares.
I'm up, but I'm averaging up. I'm fine with that. I'm a little over 6.
Hold on, I'll tell you guys.
I'm mid 7s. I'm up just a little bit.
I'm just over 9.
My blended average on SoFi is 772.
Chris, you said it was just over 9?
Yeah, it was like 906.
Yeah, I'm in that same ballpark for my blended average.
What was your guys' highest purchase of SoFi?
18 or 19?
Over $20.
22.
22.
I bought in January 2021 when it was still IPOE, like way before. I probably bought shares before you guys even heard of SoFi.
Yeah, baby, IPOE.
Because I was using them and I really, really liked the product. And so I bought a few shares, but they were like 22 or something.
977. So those were the 10 shares from the exchange. So
the craziest thing is, like, I bought SoFi over $20, like within $1.50 of, or like maybe $2 of near the highs. And then I also bought SoFi within, I think, 10 cents of the absolute low. And when we go back into double digits, I'm still going to be buying SoFi.
I knew that would get him.
What are you laughing at?
My baby's first words was Roy.
That's great.
No, my highest buy, I think, was something like 14.45 or something like that.
Yeah, I was in the high teens. I'm looking at it. I'm not logged in, but I was buying probably in May of 21. So that's when it made its second run up into the 20s. So I was right around that 19 mark, I think, for my highest buys.
Yeah. I remember this stock was bouncing between somewhere around like the 20s and then it went to like 1450. And then the second it sort of broke out of that range, I was like, man, I've been eyeing this company for a couple quarters. I'm going to buy it, and then just watched it free fall because I entered it. You know how it is.
Hey, listen, I'm cursing Tesla right now. Like I'm the freaking cursed because I'm buying Tesla and it's going down.
It always happens. It always happens that way.
Oh, I don't care. Listen, if Tesla goes to 100, I'll be happy. I'll just buy more. Like this is the first time I see the forest right now. Like I see a Tesla. I have always been very critical of them, and I've always said they're nothing but a car company. They're not a tech company. Just stop with the nonsense. Oh, they have the potential to be the biggest company in the world by 2030.
Can we throw up that other comment? ROI needs to be called ROI from now on.
Oh man.
All right, guys.
Nice comments, guys. Thanks.
Oh my
I
God.
loved it. I love a good. Oh man, the Roy stuff.
Oh,
Wait, so what was everybody's price for?
I'm not
so
saying
mine
buy
was
Tesla.
like high
I'm just saying
eights.
I'm
Roy
buying
is
Tesla
11.
because I think the bot's going to be bigger than the car business.
Yeah, people are now asking, Roy, what do you think on Tesla?
I mean, I've been buying Tesla too, but not. It was a rough earnings call. It really was. So long term, quality companies. Tesla is a quality company. SoFi is a quality company. You buy, at a price that you think is good, that you can hold for long term. You can average down, average up, and you add. As long as they're executing, as long as the thesis doesn't break, eventually, for most of those, it's going to pay off. And I think Tesla is one of those. I think I'm actually down on Tesla for the first time in a long time, which is fine, just slightly. And SoFi, it's a great company.
Yeah, I can't call bottoms. I have no idea if Tesla bottomed out today, if they're going to keep going down. I have no idea. I bought some at like 185 today, and I don't care if it keeps going down because I'm just going to buy more because Tesla is now a company I want to hold until 2030 or longer because the bot business has so much potential. I don't think people quite understand the ramifications of what he said on the conference call, and they just got it wrong.
Roy, you need to
I actually
clown.
put out a-
Roy goes solo. This is what these fuckers are saying. Fans for years. Roy, you need to dump these clowns.
So I actually put a Twitter post out that Tesla's back on my DCA list on these prices again. So like and to be clear, so I put in a small amount of capital every week. Like this isn't a large amount, right? But like I like to buy stocks every week, and I shift it based on what I think the valuations are at, right? And so Tesla is going to be on that list, and it'll have some sort of allocation, and I just set it up and I just buy this much, 5% of whatever it is that I'm investing this week will go into Tesla or whatever it is. So, and I put out the reasons why I think. And I'm with you. I think it could go back down to 100. And if it keeps falling,
great. I hope. Listen, I don't want anybody to lose money. I'll certainly lose money if it goes to 100. My whole thing is, if it gets to 100, my average price will end up being 140 or 150 because I'm just going to DCA the whole way down. I have no idea what it's going to do. I started buying a couple of weeks ago at like 220 because the bot thing is just so bullish. And I actually think I wrote an article. We'll see if Seeking Alpha wants to publish it or not. But wrote an article tonight on it, and we can have a very long conversation about it. I think that they are going to license FSD to the other car companies, but I think they're going to have a combination of FSD and the sub 25K car. Why is Tefis going off screen all the time? Can he not stop?
Bro, I'm actually going to pass out. Whoever said Roy's, go fuck yourself. Oh my God, I'm dead.
Royce.
Oh my God. Anyway, so I think that they are going to build a company within the company that takes out Uber. That's my big prediction on that Robotaxi, people may be right on Robotaxi, but I don't think it's going to be people putting their vehicle in a Robotaxi network. I think Tesla is going to utilize their engineers to build an Uber platform, utilize their FSD, and utilize their cars that they have at cost because they're manufacturing them, and have that be their own ride hailing network. And the bot, people are not thinking about how big, like if you have UPS, FedEx, these companies with manual labor, and bot is available, depending on what the energy source is, a bot can replace 2 to 3 people because it can work 2 or 3 shifts in a row. Like there are so many ramifications of this, and this isn't a US thing, this is a global thing. The bot truly can be bigger than the car business.
All right, can we wrap? Can we actually wrap?
Yeah. Let's so people are asking for our price predictions, Tevis and I think that it could definitely break into the 9s, but honestly the truth is I am in no way any sort of technical analyst at all. I do not do short-term price predictions at all. Okay, so I think that they will overperform expectation. Why is it always whenever I talk, the funniest things in the world happen? 4 people are dying.
Ticker symbol, Roy.
Roy bots are coming.
Dude. Okay. I just wanted to state though that if SoFi beats expectations, which I believe they will, they'll have a good day. But I don't know exact price targets. I think that SoFi will outperform the S&P 500 for many years to come. That's why I'm investing in it. I like the space. It's not because I have a direct price target each year all the way going out. I think that it'll be predictable earnings, and that's exciting.
Yeah, I'm just gonna say 850 so that we can wrap, so I don't pass out on live stream.
On live stream.
Let me just add.
It's early.
Let me just say too. Investing is a whole lot more fun as a community. Like being with these 4 guys, like they frankly know SoFi better than I do. I see a few things from a different angle, but having them do due diligence, I can look like tech platforms, black box, and getting to read and say what these other guys say. It's awesome. We have many in the community too that'll point out something that I won't see. Absolutely love it, and it's a lot of fun when things are going great. When they're not great, man, it's also awesome. We have one of the best communities out there, so I'm glad to be part of this team, this group.
I'm just going to leave it on what Roy said. Thank you all so much for coming.
There you go. Tune in on Monday morning for the SoFi earnings live stream, where we will hopefully all be there, except for Steve, maybe.
What time does it start?
It starts in the morning, Steve. 7:30, 8:30.
I will be driving into the city, so.
Well, last time you tuned in through your phone, so just do that again.
Yeah, I'll probably just do that.
All right. Chris, you going to be there?
Yeah, most likely. Not guaranteed, but most likely.
All right.
Well,
It's
look,
I'll probably have
guaranteed.
to leave early to get my kids ready for school, but I'll probably be
Danny,
there
you
for
going to
at
be
least
there with us on
before the
Monday?
call.
Maybe Danny's going to be there on Monday. I see him in the chat.
Yeah. Roy, if you don't show up, I don't
Roy
think
lead
anyone's
the
going to be here.
discussion.
Yeah, I might have to take some time off to join you guys. So
I'm going to see if I can move a meeting or 2 so I can join.
If Roy doesn't show up, I don't know if anyone's going to be there. Seriously. Will Roy be there? Yeah. Okay. Thank you all so much for coming. Appreciate your time. Bye for now.
Oh, fucking dad.